Hey everyone, welcome back to State of the Industry. My name is Chris Gaines, a co-founder at The Den, and I'm here with my resident blockchain experts, Vet Sadov and
Hi
Jason
everybody.
Martin. Hello. And we also have a special guest today, Jomari Peterson, the founder of the Digital Reserve. So basically, today we've got a really special episode. We're diving into general topics happening in the blockchain space as usual. Then we're also going to focus more on Jomari's expertise the digital or in the financial space of the blockchain and cryptocurrency industry. Then we're going to dive deep into his product and really understand, what's going on in the space, what motivated him to, start working on what he's working on, and how it's going to impact the industry in general. Jomari, why don't you just introduce your background, explain what got you into blockchain and what's got you, what the basics of the digital reserve are.
Yeah, it's a pleasure to be here. Thank you for inviting me to the State of the Industry. My name is, like I said, Jomari. I tell people, go remember, Jomari on Safari is Ferrari. Jomari. It typically helps just a little bit, not a lot. But yeah, I actually came into this space originally. I went to Carnegie Mellon for engineering and public policy, working on my PhD. Went to Howard for undergrad, really focused on civil engineering, funny enough. And then I did my master's in my MBA for strategy and logistics. But while I was there, I really got interested in risk assessment in ways that you can actually look at systems and how they impact people and how technology also works back and forth between the policies that people implement. So I was trying to figure out voting, and I was talking to David Chom, the cryptographer, and he was talking about ways of voting mechanisms that he was delving into as potentially being used to actually have a more democratized system. And he mentioned the blockchain area, and I started delving into the work of Ethereum and Bitcoin. And then as I was trying to look at the vulnerabilities that it worked, I saw that, there's an issue around the long-term issue of quantum resistance. Mm-hmm. So I worked with, I joined a company as a co-founder of the quantum resistant ledger, and then I helped build that out, and I exited when it was about $100 million valuation. And then as I was working there, I actually learned more about proof of stake and about the issues that people were facing and some of the difficulties. And I saw how that could be leveraged to actually start implementing the empowerment. Because if we're talking about the state of the industry, what we're looking at is a system that's been built around the Bitcoin's economic philosophies. Yeah. But there's other economic philosophies out there. So that's really where I've delved in to help create something that was equitable and that could actually serve and eliminate payday lending and high interest finance.
Awesome. So why don't you just, what's the elevator pitch for the Digital Reserve?
Yeah, the Digital Reserve's elevator pitch really comes down to that we can provide financial access globally in a scalable way. So payday loans, which is normally up to 400% interest rate per year, yep, and microfinance is on average 35%. The Digital Reserve, through building a scalable system that's actually reproducible and actually has the system dynamic built into its economic system, can actually bring down those rates by actually empowering borrowers and letting them bid on the loans themselves and creating a capital pool by people who are actually leveraging the network. So we can help people inside developing countries while still providing the same type of returns people are looking for in developed regions.
Awesome. I mean, the Digital Reserve to me sounds like taking some of the general ethos of, the initial blockchains or the cryptocurrency space, Bitcoin, and trying to bring it to fruition, make it happen. Like empowering, developing countries is a huge
absolutely
use case. So we're really excited. We're going to dive a lot deeper into the Digital Reserve later on.
Looking forward to it.
But right now, we kind of want to get your opinion along with everyone else of the general stuff that's been happening recently. So let's go into the first topic. So really interesting thing that's happened. So apparently a blockchain bandit is guessing private keys and scoring millions of dollars. So this guy named Adrian Bednarik, he's like a cryptocurrency consultant or security consultant. He recently released a paper on his company, Independent Security Evaluators. And they found that cryptocurrency users have actually been using guessable private keys. And some bandits have been obviously figuring these things out and draining their accounts. I think their paper details them going through essentially one Ethereum account seems to have been drained of $50 million worth of Ether. So yeah, let me know what you guys think about this kind of situation.
Well, I think it's pretty much the kind of significant event in our epoch of everybody getting directly to the sphere or to the field which they don't understand anything about. So we have a technology where most people get because of the hype, because of they want to make money, but now they realize that that's a responsibility as well. And supposedly, well, not supposedly, mathematically, you cannot really guess Ethereum password phrase is if that was formed properly, because the probability is for about like a 2 in a 256, 2 in the power of 256.
Yeah.
Right, that's more than the elementary particles in the universe.
The denomination is a quattuorovigintillion.
Oh, you can pronounce that. I don't even venture.
That's a hypnophonics.
Yeah. So the point being, if you want, well, I'm not looking at you like for an example of this one. For all of us, if we really want to be responsible for our own money, if we want to play the role of our own banks, we have to take that responsibility to take security very seriously. And just using one key on your keyboard, because when I read that article, I was dumbstruck that many people, in order to generate their password phrase, which usually required by some wallets, and they usually require you just to push several buttons.
Yeah.
So people push one, and this one is enter. So of course the hash from that one button will be the same always.
Yeah.
And we have like millions and millions of accounts now in blockchain.
Yeah.
And there's no wonder that there are smart people who just run a script, scanning all the network, and getting profit from that.
Yeah.
Yeah. No, I mean, I think the thing that's you got to remember is that all these wallets are secured by a private key, and that the generation is supposed to be random. However, for ease, you want to have people want ways of easily remembering what they have.
Yeah.
So therefore, you create something that's simple, like saying, "Oh, let me have a key that all the numbers add up to 1 or 50," and then that's somebody can figure out, and that becomes easy. If you try to use like there's mnemonic words, right? You can have like a set of words, and they use that to create your key. But if it's Jesus wept, or it's like 230 years ago, or anything that people are familiar with,
Yep.
it's more likely that somebody else is going to stumble across that. So I think that's what this is a lesson about. It's having responsibility, but also remembering that there's this cross section between convenience and security. And that's really what this is realized. Like people who are opting for easy to remember stuff are vulnerable to attacks like this, especially when you don't have insurance protocols and other like multi-sig addresses. I actually advocate people use multi-signature addresses. Then you can have something simple, but it's secured by something more complex, and then you operate in that type of way.
Yeah.
So what do you think can be the cure for that one?
Well, for me, I think it's multi-signature addresses. I mean, while it's a little bit more complex, it does allow you to actually have a secondary component to make sure you're secure. So even if it's 2 separate easy ones, that's more complex because you have to get them both simultaneously.
Yeah.
And that increases the complexity.
Significantly.
Yeah, but
I agree on multi-signature should make it more complex unless it's parity, right?
Yeah.
And parity a second time, right? Because they did mess that up twice, right?
No, absolutely.
They did, right?
Can you explain?
But-
Can you explain that for the listeners?
Gosh, you always ask me this stuff, man. But the point I
that's
really
wrong.
wanted to make, that's what came to mind was that. It was like, but multisig is supposed to be able to help you out, to get you out of these scenarios and make it easy. But people have been, and even Bitcoin, have been breaking easy keys since day one, like it's just that's what you do, I'm not saying that you go out and do that, people, but I'm saying that
But it is what you do.
it is what you do.
If you're not doing it, someone probably is trying.
Yes, somebody is doing this, and you'd see it on Reddit every once in a while where sometimes they might have a key collision that might happen. It's never supposed to happen,
Yeah.
but it
does.
It does happen, And every once in a while you see something on Reddit like, oh my gosh, I somehow, I don't know how this happened, but it looks like it did, and person who had this. Let me give you this back. I'm not trying to rip anybody off here, but you see it occasionally. It pops up, and it's part of the ecosystem. It's how things go. So I'm saying, I know this was an article from Wired that came out earlier this week, right? And it's wasn't news to me that people were doing this, but I also thought it was interesting that, it is a good topic that, every year something crazy like this happens. And I'm cool that, I think it's cool that Wired is, has a writer that's actually, pushing these things out to people to think more about this. It comes down to, security operations. And having really easy keys is not good security operations.
Well, we also have an issue that there are many people who are not so knowledgeable with computers, or maybe old enough, or they cannot even use a computer or see the keyboard. So that issue will, if you really want to, cryptocurrency takes widespread adoption, we have to think about it.
And another thing is that it could be that these people were using services that generated these easy key wallets too, so that they were duped from the beginning. And they didn't actually do it on purpose to try to make
that's
it's the wallet provider behind it is actually in on the whole thing, trying to. Right.
Yeah, I mean, this is the issue, is when you're combining, the technology is there, technology is advancing, it adds more security than a lot of stuff we've been using, but when you add the human element, you're always reintroducing the potential for security risks, right? And if someone does not understand exactly how the technology works, they're just typically going to follow whatever is kind of the path of least resistance. Right? And the path of least resistance is pressing enter when, you're prompted to just, set up an account. You don't know that, you don't understand the risks that you're taking by not playing into the system in the way that like a computer would, right? Granted, you can't completely generate a random number on the blockchain, but it's set up for you to have a completely random mnemonic or a completely random private key. But, you take that quattro vigintillion, chance of actually guessing a private key, and then you take all the humans who are actually creating accounts, and then you take the general patterns that humans tend to follow. Yeah, maybe, 99% of people or 99.9% of people won't, be vulnerable, but there are going to be those accounts or those unfortunate souls who generate the general private key, or they use they create a MetaMask account on the testnet and they don't care about it, but then they use their same exact mnemonic on the real or the mainnet, right? And then that's something that someone would want to guess, or you can write a script to guess.
Oh, here's a question I have for everybody. Do you think because of that we are heading to the future when custodial accounts or multi-wallets became more and more widespread, kind of replacing the system with which the wallets which we have now, like individual wallets? So what do you think going to be the future? Like more custodial wallets, more multi-sig, or we going to be like
all those sorts of questions I always go back to, it comes down to security operations and encryption, right?
Yes.
And we're living in a day where people still don't encrypt their emails. So I don't see people doing extra steps. I really don't. They should be taking them, should be smart enough to do it, but I don't think the majority of the people are going to do anything different than what they've been doing.
So you are school the thought that we are moving to that multi-sig future more and more, right?
It should be, yes, but will it?
So I know that Coinbase offers a self-custodianship one where they have a shared key with Coinbase. So for my sake, I know that Casa, the Lightning Network people, they're offering a solution that has something similar to that for recovery of your keys if you lose them, where they have a set, and then you have your own keys that operate as you need to. So I think people are moving in that direction where you still need to be responsible, but you do have some support, some help that you're willing to trust with a piece of the puzzle.
Something like a backdoor.
Yeah.
Which is not particularly the idea of the blockchain, right?
Right. I mean, but it also depends on what level you're talking about. If it's like a 2 or 3 or a 3 or 4, and they just have one piece,
one portion,
then and you lose one of yours, you might still need them, but they can't access it on their own. So you're still needed. It's not a full backdoor. It just provides some accessibility that sometimes you mess up, and they're providing a little bit of support in that case.
Okay.
Yeah. It seems like that's the direction that general usability is kind of moving towards, and unless people really want to make sure they come up with the most random passkey or like a mnemonic, it's going to be a necessity as more widespread adoption takes place. Right?
Yeah.
It sounds like
I agree with you, Svet. I agree with you in that, people should just be more responsible and take care of this themselves. It's supposed to be trustless. And if you start trusting a bunch more people, then it defeats the whole purpose of all of this. So
you do dilute the original idea.
I think maybe we can think about, say, we have forests, right? And we have forests where there are a lot of wild animals, in some of them, right? I don't know, in Amazon region. And if you wanted to visit that forest, you better be prepared. And it's not the reason to get rid of this forest because there is a wild and very, very dangerous animals there. It's the point that you have to be either prepared or not to go there. So I think probably in blockchain we have to have the same. We have to have like a very puristic type of blockchain where people can exercise their rights to be free from any types of coercive powers or anything. And there are maybe bigger part where people voluntarily join to in order to be able to transact easily without too much caring about freedoms and anything else.
Yeah. I don't think that choice is going to go away.
Yeah.
I mean, on chain, it's just people are choosing this
The easy way.
the easy way. But I mean, that doesn't remove the capacity for you to
Exactly.
hold it on your own. Like, I think the issue becomes if those other entities become large enough that most people transact in their networks and you're left on the outside, and that starts to hamper your ability to.
Yeah, the network effect.
Right.
It can help or hurt. Let's shift on to the next topic. I think this one is going to be a favorite of Svet, actually. All right, so we're basically moving on to there's an article published on Decrypt called "Confessions of a White Paper Writer."
Yeah, I love that.
I'm sure anyone who's like read white papers or kind of knows how they're created. There's a lot of stuff that maybe the general public doesn't know about what is really going on. So essentially, basically, the guy describes the writing of these papers is largely outsourced to contractors, many with limited technical knowledge. Authors are consistently required to fabricate and exaggerate facts. Project founders often go into blockchain with little understanding of what they want to build or even how to build it, merely hoping the word blockchain will attract investors. I could go on and on. Let me know what you guys think about the white paper ecosystem and how it connects to the real world.
Yeah, well, I know for me, as someone who wrote my own white paper and actually did the research from monetary policy to cryptography to the economics underlying it, as well as the business practicalities, I know when I read other papers and they don't delve into the impacts and the risks and the advantages of their decisions, it infuriates me. If I read a paper and there's no sourcing, there's no basis for your assumptions, for your rationale, I typically shut it off and I consider it irrelevant.
Yeah.
Like it wasn't worth the time and the investment. Some white papers get really technical. Actually, there's some that's overly technical and you don't understand what their purpose is. I feel like there's a sweet spot of there's readability, but there's also like being clear about what your objectives are. And then making sure that you support those with your, like, you don't have to explain out how every function works.
Yeah, of course.
But provide some depth,
some substance.
Some substance. let me know it's real. Let me know the thought processes that support it. I think that's really my thing when it comes to white paper. It's people don't put in the work to make sure that it's supported adequately.
The question, do you have some kind of ideal white paper which you ever liked or can recommend as maybe some layoff for people who try to write white papers?
Aside from mine?
Yes.
Okay. No, I do like, boy, whose white paper have I read recently? I think I liked Bloom's, Bloom Ideas when theirs first came out. I know who I liked. There's this guy.
Don't tell me that Satoshi Nakamoto.
No. I'm not gonna go there. No, it's actually Sweetbridge.
Oh, I haven't read that.
Yeah, Sweetbridge. They're a supply chain or organization, and I know that this guy named Micro Zagram, I believe is his name. He's with Block Science.
So we're making like a free promotion for those guys, right?
Yeah, I mean, no, basically, I mean, well, that's his name. That's the reference.
That's what
like.
So why did you like it? So what was it? Was it kind of concise, or was it addressing?
It was the support of their assumptions and their functionality, and they had it their monetary policy and their logistics and how things interact with each other and the rationale behind why they believe things will work was well done. Was very well done.
So it's more like why they write that white paper, and it's clearly identified in the first paragraph. You know why you're reading it, and that's why you like it, right?
Right, and when you read through it, you can see the work that was done.
Yeah.
Okay.
And then they also had a supplementary paper that was like supporting it that I started to read as well. But I didn't really do that truthfully.
Oh,
But-
okay. So there were like a technical part which was separate, and you don't need to read through all of them to understand the project. That's what you're.
Yes.
So what about you, Jason? Tell me.
Man, I stopped investing in projects, so I quit reading white papers. That's where, I haven't read a white paper in 2 years. Legit.
Yeah.
I was reading them during, before when I was doing investments in ICOs and all sorts of things that I was buying into. And then I just stopped. I was like, well, I don't want to focus on my stuff is what really kicked it off. I was like, I keep reading all these other people's ideas.
Yeah.
I need to do my own thing, and at that point I was like, I'm just shutting this off. So, but no,
Do you think we need white papers?
man. So early on for sure, but then when everybody started doing their own thing, a lot of the things are very much the same type of stuff. And it's like, do I really need a white paper to have somebody that's doing something similar? And then similar things got to the point of, we had things coming out where like, hey, this one's actually plagiarized. It's so similar that we cut and pasted it out of this other one.
Yeah.
And it was around then, and I was like, you know what? I'm done reading these. So
here's
and like Spec, I know you do yours, right? And I love that you do that. And you ask me like each week, hey, Jason, come on, let's do this white paper. But I'm just like so done with reading white papers. That's why I tell you no every week. I'm sorry, and I keep tapping the table. I'm not gonna do that.
But that's a good point. So white papers in 2019, I think, have a very different value or level of value than they did 2017.
Yeah.
Right? So,
They need to. They better. But I just haven't checked in.
So much has happened, right? So in 2017, when white papers were coming out, obviously people are doing ICOs. Did you guys see any strong correlation between what people were talking about as a really good white paper and having a really successful ICO? Or
No.
there was not really a correlation. I actually agree with you. I don't think there was much of a correlation, which kind of points to this article really describing it, right? Why spend all this time and effort to really go deep down into what you're trying to build, back it up with everything? Obviously depends.
I beg to disagree, guys.
Okay, all right, let's hear it.
My guess. So I wouldn't ask how many white papers have you guys read in your entire life, but because I read more than 300 of them, so I pretty much can tell you that
He's a white paper expert.
There is a direct correlation between the. However, it is not clear whether because of the white paper, the project like Tether or like EOS or like Cardano, they have very good white papers. Were able to raise as much fund as I did. So it's not the question of the correlation, it's the question which way this correlation goes. So whether those guys are just good at everything, they're good at writing codes, they're good at writing white papers, and they're good at writing the right type of white papers, meaning presenting their ideas to the key investors they envisioned at the beginning of the project to be their key investor. You understand? It's not very confusing because there are two basic types of projects now for raising funds. First, which become less and less prominent on the market, those who are going to the all types of the crypto holders. Meaning like traditional ICO, you go online, you publish white paper and just like a prey, right? Expecting that everybody become hype about your idea and just start to throwing coins in your pockets. But the second, more prominent class of the projects, now they address some specific type of investors. For example, VCs, right? Yeah. So they prepare and write this white paper specifically for the category of investors they want. And that paper become more and more sophisticated, more and more lengthy, and more influential, because just imagine how many projects we have. For according to what I kind of see the numbers, there are more than 300 projects per month now in which like a new project.
Yeah.
And all of them generate white paper. That's a competition.
Yes, but traditionally white papers are supposed to be like scientific reports to share your idea at. It's not supposed to be about this is how I'm raising money. That's supposed to be your prospectus. So
That's not correct.
Yeah, I don't quite agree with that either. I think white papers sit in the space between a technical paper and a marketing paper. Like, white papers are meant to market you, but provide technical expertise in the process, and then combine those aspects so people feel like understand they're getting good content that makes them want to understand it more, but also is for them to send it, also take action upon the information that's there in some way. That's because there's white papers outside of this space as well. People make all the time, and those aren't purely technical. They're marketing pieces, but they're also technical pieces.
Yeah, and they go down the whole color list from white paper to yellow paper to
Blue paper, green paper,
all the way down the
yellow
list.
paper. I've seen them all.
Yeah.
However, from where this white paper originally came. That's I don't know, maybe it's anecdotal, but when I try to kind of get deeper to the history of white paper, it turns out that the first guy who produced white paper was no one but Winston Churchill.
Okay.
So white paper came directly from politicians, from people who prepare very brief memorandum for kind of, ministry, cabinet type of meetings where they need to explain some of their ideas in very precise and brief format. So white paper is not about describing everything you know about the subject. Instead, it's usually no more than 10 pages, where maybe it's a 5-page where you kind of disclose your idea to the informed public. So that's the difference between some kind of advertisement or business plan and white paper. And then white paper kind of originally became more and more used in academic circles, because sometimes they write very sophisticated doctoral kind of theses which take them years to prepare, but then they need to distribute those theses to their peers. Right. Nobody will be reading these thousands of pages of work. So that's where white paper came into the kind of PhD type of circles, and from PhD we inherited that, because obviously Vitalik was like a PhD type of guy. Satoshi and Hashkison, or all of these guys, Lorimer pretty much was also PhD type of education background.
Well, it feels like the definition or the use of a white paper has gone from more value-based, more academic. It's shifted over to the marketing side, right? And that, I think, explains why people are willing to pay, $1,000 to like $50,000 to someone else.
That's another good question, actually.
To write their white paper, because if they're looking at it as a marketing play, obviously to plug in whatever technical stuff they can. So I guess what I'm just trying to understand is so it's relatively obvious that this stuff has been happening, but what is the impact of someone else doing your white paper, them basically being your voice to some extent for something that you were trying to raise money?
Yeah. I think kind of what he described, people stop reading them, or people notice that there's a commonality in everything they're reading. Like if you're the person that's churning out 50 of them a week, like you're saturating the market now with your content, with your style of writing, or with someone else's style of writing if you're plagiarizing.
I'm not a writer, I'm an aggregator.
Right. So then you end up with a lot of the same thing. And that gets tiresome, and it becomes work to sift through all that information and find something that actually matters to you and resonates with you. So I think that's what the impact is. It moved white papers and their content, what that means, further off the table. And now we're back almost to where we were before this, where people want one product first. Like, hey, let me see how it works. Let me experience how it works. Your white paper doesn't do it for me.
And realistically, I think that's a better place to be.
Well, I think we have to think about the precedents. We already have a lot of precedents in our regular stock market. Because at the beginning of the stock market in 1920s, there were so-called red herrings published in big papers where you have several even lines about some particular stock being kind of proposed to the wider public. Then there were a lot of legislations which required financial analytics, take care about informing public about what is this company is about, and so on and so forth. So there is a lot of history, but public stopped reading these analytical reports even in our everyday market where there is nothing about cryptocurrencies. I mean, Apple. When the last time have you read Apple quarterly report? Tell me. last year, probably never, even if you are.
I've done that though. I've done that in the last month. You know,
because probably you kind of
businesses and things like that. Yeah.
Unique sample is where unique samples are.
So that's exactly where we
definitely not a representative sample.
Exactly.
But you understand my point, right? So we more or less heading not to the direction when white paper will be useless. We're heading to the direction of segmentation. They're going to be the professionals who prepare and read these white papers, like we have in analytical companies, we have consulting companies in Wall Street, which present this, which actually read these very detailed reports and then present these numbers to the wide variety of the investors and to the public, which probably never heard about that company. So that's kind of infrastructure type of development. That's how I see what's happening now. However, of course, I don't take any abuse from the company which outsourced white paper writing, because sometimes you're just good in writing codes and you don't have any clue about English language, right?
Right. Yeah. I guess the difficulty becomes: do they actually understand what you're trying to build and the concept? Are they just writing something to attract people?
Yeah.
And then do you understand what they wrote enough to make sure that it reflects what you're actually trying to build?
Well, there are different types of papers, first of all. There is a technical paper, there is business paper, then we have cryptonomics or economics paper, and there is kind of this advertisements paper, like better to call them like a notes, visionary paper, which should just present to everybody what you try to build. So that's another kind of development I see in this area. People start to write more and more specialized papers, or just contain themselves with issuing like a two pages of a memoranda about to investors, saying, okay, guys, here we go. We propose you these coins. We're doing blah, blah, blah. And if you want something more detailed about our company, here's a reference to our different papers. Mm-hmm. So that's how it works, as I see. It's okay.
Yeah, I mean, it seems to make sense the way it's progressing.
Yeah.
Right. So let's hop on to the next topic. So now we're shifting into stuff that's a little more financial focused. And what better way to start than with Tether?
That's big topic this week.
2 days ago it came out, right? 3 days, I'm sorry.
So the article basically says Bitfinex used Tether reserves to mask a missing $850 million. Yeah, you guys already kind of have an idea of what's going on, so let's hear it.
I mean, the biggest thing is, from the beginning, people are like, Tether needs an audit. We need an audit for Tether. Let's prove this out that it's actually, what it's supposed to be, a 1-to-1 or whatever. Or if it's not 1-to-1, let's at least get the number out there so everybody knows what they're dealing with,
Yeah.
And it's never really happened.
I mean, the idea of Tether is so it seems so straightforward and simple, right? Look, let's back every single, cryptocurrency or that particular token with an actual dollar. Sweet. Okay. And then, exchanges and everything work. But in any other financial institution or situation, would that not be subject to an audit?
Correct me if I'm wrong. I thought that Tezos already was a subject of some kind of audit, like maybe 6 or 7 months ago. Remember this time? It was another Tether scare, and Tether dropped to the 75%, and it was against, again, the same kind of fear that they don't have a reserves. But then, as I can't remember it now, correct me if I'm wrong again,
I can't remember.
Some of the firm come out and said, okay, Tezos is fine. They got as much money as the state. And it was at the end of it, the first scare.
I remember something.
You remember?
Nature, yes.
But I can't remember the exact name of the company. Specifics. But
yeah. So I think the thing that makes So I remember that when that happened, and I did remember they came out with something to provide enough evidence for most people to feel like
comfortable,
a little bit more comfortable. I think what this speaks to, though, is also that dependence and reliance on these trusted third parties, because that's what that explicitly is like saying.
Yeah,
we can't check your books. We have no option of validating your claims. And what's funny, I think, is the realization that people came is with this most recent thing, because they said the money was seized, like $850 million was seized potentially by crypto capital, had their money potentially seized by a bunch of other governments, supposedly. Yeah. However, our government is saying that it was that they walked away with it potentially. Right. But regardless of which way it happened, people are saying this also tells you they had $850 million to take.
Yeah,
which says that they did have
something.
They had something.
They had someone on the books that they were operating with.
Yeah.
I think it's important here to make the facts more or less clear, because I still don't have any clarity about what's going on. Because first when it came to my attention, it was one of the group's members. He sent me that information, and I read that publication of this, as everybody did in the Reuters, which says that about like $800 billion are in custody or in a possession, commingling, so-called commingling funds. You know what commingling is, right? So you use some funds from one account and then mixed with the funds held on another account. Okay. So you cannot really define which part of this like non-fungible United States dollars belongs to whom. And that's what happened. And it was like situation past at least 6 months with these two companies, because we have Tether and we have another
and
Crypto Capital, who are holder of that. But what came out is that actually Tether, they cannot take the fund back from that Crypto Capital for some, I don't know, mysterious reason, still mysterious. But it doesn't mean that they lost it. It just maybe they have some terms of agreement which said that this capital can use, this company can use their funds during some period of time. And this terms is still active. We don't know. What we know for certain is that New York Attorney General launched all of this noise. So he can actually publicly accuse the company in losing this money, which is a huge difference. And that's why my first reaction was, okay, that's another lawyer trying to make his name visible in a public kind of media environment in behalf of us entrepreneurs, which always happens, you know.
Right. No, I mean, so what's interesting is even inside her letter or statement that she made, she told Tether to continue operating as status quo.
Oh yeah, thank you very much.
I mean, so that was the funny part. Like I said, she was saying continue operate as you were, but pointing out this thing. So I'm not quite sure what the consultation that happened around the release of the statement, because that's what I was unclear. What was the result of that statement supposed to have been?
That's the point.
That's what I was unclear on. Like, what did she expect to happen?
Yeah.
From that statement, I understood what happened. I mean, in regards to they had money with crypto capital because they couldn't get banking inside in the country, so they was leveraging them to actually be an intermediary. And then Bitfinex was also leveraging them. And then Bitfinex, I guess something happened on Bitfinex side where they connected, so they ended up borrowing the money from Tether under some lending clause, and then those actions are what increased the unclarity or lack of clarity about their reserves and about if they was really keeping it or if they're now considering their reserves as, this debt is part of our reserves.
So basically we have a typical FUD situation. So nobody knows what's happening, but everybody starts selling. So as a result,
Exactly.
I'm out. I don't get this.
So I don't need more of that crypto. I'm out. Yes, crypto is dead. So that's what's going on. Again and again. And what the question I always ask myself after reading that, will it be ever end to that type of situation? Or even what we need to end at least this, I would call it government racket, because that's what's going on now, right? So people using the absence of legislation about crypto to do their business, to kind of use it for enhance their careers, or to just make a hype on it, or maybe even just dump coins in order to purchase them on the bottom. So when we will see the end, or will we ever see the end? That's a question for you guys.
For me, wow.
No, for you, yes, because you're
Are we
sitting
ever going to see the
nothing.
end of pump and dumps? I think this is tough. As more people get educated on things and understand basic analytics and how graphs are supposed to look.
You want a New York general attorney?
How graphs are supposed to look. I think it will reduce, some education will reduce people falling for pumps and dumps. And if we can reduce people falling for them, then
The cost is less likely to happen.
They're less likely to happen because there's less incentivized in doing them.
It's incentives.
However, on the government level, come on. I don't trust any of that. So,
Yeah, I don't think that. Well, I partially agree with that. Education, if you kind of spread this massive education, or at least have some courses, basic courses in universities where people taught what's going on, right?
High school, yeah.
Like a one-on-one.
I raised you preschool.
But I don't know how soon it will happen. I'm not very optimistic, at least this one. But I don't think it will raise the awareness of the public about what's. But I don't think it will decrease the actually volatility on the market in very kind of short-term perspective, even in medium term, because it's a very new sphere. It's a very kind of maybe how many we have, like a couple of million accounts which more or less. Involved in crypto on a everyday basis. That's a statistics, and that will be growing very quickly. And we have more and more people coming to the sphere without any background education. So that situation is more or less. We will see that situation to persist more or less, like at least 10 years. That I like this 10 years, and that's why I think that
So you think it'll take 10 years for the incentives of like bad
I think it will
actors,
take 10 years before our
decrease.
educational system will catch up with all of these necessary moves, at least basic moves, to study, to let public study at least finance.
Yeah,
I don't even ask about
it takes
Start
about
with
10, 20
finance.
years for educational books to get updated anyways.
Right.
So I think you're being generous with teaming. Like, you're being generous.
No, here's a thought though. Like
You're my man. At last, I have
Somebody on your
some
side.
support. Yes.
so imagine. I mean, look at joining Coinbase, getting an account on Coinbase. Like their whole goal was to make it as simple as possible, but in the overall benefit of the entire ecosystem, wouldn't it have made more sense to have like a mandatory like course or something where you have a basic understanding of what's going on before you actually get
I liked how like my crypto, originally, my Ether wallet. That's what I meant. My Ether wallet. They originally you could just go in, do a key file, do whatever you do. And then later on in their products, like they had the whole slide deck. You have to like click through, like telling you with little pictures and everything. Every time you're going to log in, it's like here, and then at the last one's like. FFS, get me out of here, which is hilarious. But I was happy to see that, like for real. Like I felt better to tell my mom like how this stuff works. Like mom, check this site out. Read everything. That pops up.
Yeah,
and
I think we need to see more of that.
Yes,
that alone. You're thinking about the bottom rungs of people who are involved in crypto, but the amount of knowledge they have is practically nothing. Right at the top, you have people who are incentivized to make the most money possible by being a part of the ecosystem. So, if education is the what will move the bottom rung of people up so that they're not susceptible to these issues, then I think that's what the industry needs to focus on, especially the people who are trying to make it as convenient as possible. Part of convenience is not losing your funds or being a part of FUD when it doesn't need to exist.
Yeah.
Right. So I think that's where that's what I would take away from this discussion is let's get Coinbase, let's get all these people to like mandate that you have some basic understanding of what's going on before getting involved.
Can I add something else? So I think that most of the companies, majority of companies, I can say even all of the companies, doing a very poor job on educating their users.
Completely agree.
Because I was here in the Valley, in San Francisco, in the Bay Area, participant of most of the hackathons, meetups, you name it, like after parties, and where people, like pretty much the founders of the companies, trying to present their case to the developers, saying, guys, we need more developers, come to us, learn it. What they did to make it easier for us to understand even the basics of their economy. I mean, like their technology, nothing. I mean, like only one example, which maybe I can cite, it's a Consensus, who support such companies like Crypto Zombies. They at least making some efforts.
Yeah.
Crypto Zombies, right? If anybody want to program in Solidity, you go to Crypto Zombies. So that's a good example. But look at the other coins. Have you ever tried to use Camel and
Yeah,
you know what I'm talking about.
So yeah, I also think that there's, when you talk about that, you gotta recognize that there's different in funding capacities they have for building those tools.
Yeah.
And that's part of the issue. Like
That's not a part of the issue because EOS raised $4.2
no, exactly.
billion.
And that's why I said some. That's why I said some.
Still
some.
none.
Some not all. Like no,
of educational material.
they have no excuse. Like
No excuse.
them, Tezos,
Cardano,
like those ones have no excuse.
excuses.
They all should have like they should look at consensus and everybody else saying they should all have the same suite of tools.
Yeah.
Just because they have the potential to fund building those same exact tools for each other. There should be no difference really. Like if I see a tool on Ethereum, I should be able to find that exact same tool on EOS. I should be able to find that tool on Cardano, on Tezos.
Absolutely. Yeah.
Cosmos too, I think. I feel like because they raised some substantial amount.
Yeah.
I feel like if they don't have those tools, that's a problem because they have a prototype. They have an example of what has worked for people. So duplicate what works and innovate on the things that's not.
I think we still have the same problem which we did have even 5 years ago in cryptocurrencies. So that place is dominated by developers. It's just all the CEOs are developers, all the major functionaries or management are from development. They don't have any clue how really talk to public, how to make their product visible. I mean, not visible in terms of people start to buy
Accessible,
coins.
right?
Accessible in terms of more people start to using their applications. It's just, I can't even see the advertisements. Like digestible advertisements about new applications.
Yeah.
Have you ever seen something like a cool, very short, very kind of concise message?
Eliminate predatory lending.
Yes. Yes. That's
I think we're about to segue into that. Let's do it. I think now is the time.
okay. Yeah.
No. But occasionally you set me up. Like, have you ever heard a statement that's just simple, a few words?
to sell someone on.
I will critique your statement in the third part of our movie.
I think let's just hop into it.
Yeah.
Let's learn about the digital
Yes.
reserve. So Jomari, why don't you explain to us like exactly how it works? You take us through the process of someone who will be using it, and then tell us like where you are in the stage of the company right now.
Absolutely. So, hello viewers out there. I'm gonna continue talking over here, but we're with you. So in regards to the digital reserve, really, like you asked earlier about why is it even called the digital reserve? We called it that because I believe that there's different economic philosophies around how you can do monetary policy. I do believe in strict monetarism. I believe in like having a very clear monetary policy. Bitcoin has the scarcity perspective, like saying, hey, there's only going to be so many coins ever created in this time period. That's it. I personally, from that deflationary perspective, I don't think that's viable for productivity and for people who are inside developing regions who aren't the first movers, because it actually having that type of system doesn't incentivize someone to lend, because if I have the money, if I lend it to you, I don't have access to it. You create new value, and then that new value has to accrue to all people who still have the coin. I don't have the coin right now until you pay me back. So when you pay me back, then that new value that was created went to everybody else instead of to me. I just got the little bit. Let somebody else lend to you. I'll just hold the money. When you create value, it'll go to me. So that's the problem when you don't have an increase in your network, because if it's static, you have a static economy over time. The reason, so therefore, what we were trying to design is like, how do you actually create a network that is reflective of value? How do you actually create an incentive to create value? So what the Federal Reserve does is they actually lend through banks. I mean, they provide them a discount, and then that's how they increase the monetary supply. But by lending. For us, we'll say, okay, we don't want to lend to banks. We want to lend directly to people. We want to provide the people in the most disadvantaged communities to have access to funds. So how do we do that? We actually create the minting of money to be directed to those people inside those areas. So they have that access to the financial capacity. And when they actually pay back their debts, that can become a form or a metric of their productivity. So if you have a metric of productivity, you actually have a difference than Bitcoin, because now in Bitcoin you can pass money back and forth between me and you all day, and we have no way of telling if I was creating anything, buying anything, or I'll just pass the money back to myself and look like it was passed to someone else. But if I have debt, now I have a metric of value being created, because if you have to pay me back something more, if there's only a limited amount at that time, that means that extra bit you either have to come out your own pocket or come out of somebody else's pocket to pay me back. So therefore, some type of exchange, some type of value has to be occurring. Yeah. So now you have a metric of value, and every metric of value, now you can evaluate your productivity on chain. You can evaluate your productivity on chain. You can actually keep on lending. You can increase your monetary policy to be reflective of that productivity that's happening. So that's kind of where.
Can I criticize that?
Yeah, please do.
Do it.
I just was holding myself. And have you ever? I think everybody here watched that Bitcoin Friends. Bitcoin Friends, hilarious cartoons.
I'm sorry, I did miss that.
Okay, that's partially explains. Yeah. That explains it, and excuse you, but the point what I'm trying to make is I just was sitting like 2 minutes and listening to this MBA lecture, right? MBA, like your MBA,
like Bachelor's Business. Okay, gotcha.
Masters of Business Administration lecture about these reserves, lending, using words which I'm familiar with. But if you really try to appeal to your potential users, most of them, they are not MBAs. Just people who want to get money and want to know very simple things. First, how they work, how it works.
Yeah, absolutely.
Second, how secure it is. Yeah. And the third, which is in crypto always the issue, will governments going to be on their back? So that's the question you have to address just immediately from the get-go in maybe 10 words.
Yeah,
and that
absolutely.
Again, I'm just criticizing you because I want to make from you an example to our.
Oh no, absolutely. So yes, so I was introducing it more so from an industry perspective, like for a sales point perspective. Somebody using it doesn't have to know any of what I'm talking about. It's really about, hey, if you want to make money, like if you want to be a part of this lending process, if you want to like do social good while making money, like you can commit some money, you can stake some money, you can put some money in this account. It goes into a pool of money, and then people are able to, and that money is actually bid on by users. So the users then are borrowing the money for some interest rate that they bid it in their auction system. And then they do whatever if they're mowing lawns, if they're making thingamabobs, they do their work, they make the money back, and they pay back into the pool. That pool gets divided upon the people that was in there, and you get your money. That's it. That's all your experience has to be. For those who care about how this actually fundamentally works in economic systems that underlie it, that make sure that it's sustainable and viable, that's really what I'll speak to, because it's the state of the industry. And the industry issue I have right now is actually people are so focused on the money part that they're not thinking about the systems. And for me, what makes me excited about even this space is that people are coming together around common values. And they're creating systems that are reflective of those values. So what I'm trying to create is a system that's reflective of some values that I have. I think that that sharing and operating with everybody in the world, that those people inside developing regions, actually, they have the most capacity to produce and to make than what we have current access. But we have to have a system that can actually allow us to lend globally and internationally. Because like Kiva, because Kiva can't do that right now.
That's exactly. Even you, MBA guy, right? You're not a developer, right? And you don't want to be a developer.
I actually am a developer, but I tell people I'm a bad developer.
Yeah, you're a bad developer.
Disclaimers.
But you talk like a developer.
Yeah.
So and I'm not blaming you, because most of us, me including, we do the same. Because we're so excited about the technology that as soon as we start describing our project, we just show to everybody the inside of that project or product. We just so I don't know, enlightened by the idea of decentralization, of making this finance for everybody, and we don't think about the people on the other side of the screen, because they don't care.
Yeah,
absolutely not. What they care is how to get
value,
how to get finance from your product, from your pocket to their pocket, and of course pay you back something which you ask for. But again, it's not so much a criticism of you. So it's some criticism of everybody in that space which I ever heard this presentation from. See?
No, absolutely. So I guess what I say, it's for you viewers out there, I want you to take a second, close your eyes, think about what matters to you.
That's come on.
And then as you think about that, is it just about making money, or is it about living in a better world? Like, and can you make money and live in a better world? So, and what I'm telling people is, Bitcoin might be able to make you money, but it won't necessarily create a better world. I'm saying that.
That's deep.
I'm saying what I'm trying to build is, I believe fundamentally can make you money and create a better world. Because the people that actually need access to money aren't getting it right now. And this is a way to actually cross international borders and not worry about your geopolitical location. Like, not worry about where you're born, where you have dollars or you have euros or you have pesos. You can operate inside of an economic system that values their lives just as much as yours and invest in their work. I mean, that's why that's the non-technical description of what's going on.
Yeah.
But people want to do that, but they don't have a way. Kiva exists.
If I'm a user, potential user, I say I don't care. I just want to answer a simple question. If I'm an American citizen, can I use your application right now? Will it require QIC and ML? And if it will, so what's the difference between I'm using your service and anybody else's service, or the other banking services?
Yes. Well, one of the big differences, kind of in our approach, is that we're, at least if you're a lender, I mean, the KYC part isn't necessary. The only thing you have to do is stake the money or commit the money into the network. Borrowers do have a form of reputation of getting identified, attesting, or having some attestation to their existence, because that's the only way pseudo-anonymous lending works. Mm-hmm. You have to be able to identify at some level the person. I don't need to know who you are, but I need to be able to track your history enough to be able to sustain the network.
But you have to be a United States resident to use, or you can do that from China or
actually,
Russia.
So that kind of leads to one of the questions I wanted to know is, so with the way the digital reserve is set up, what are the legal hurdles that you have already kind of addressed, and like what are you still going to have to address?
Yeah. The main legal hurdle for us has nothing to do with the technology or the network or how it functions.
Yeah.
It has to do with the raising of funds to execute on the project.
Okay.
Like, it's the difference between those 2 points. However, at the network level, I mean, for us it's a decentralized network. It's supposed to operate based on the protocol, independent of us. Like, that's the entire goal. Like, with no shutdown keys or anything from our side. So at network existence, anybody can participate in, just like Bitcoin, just like Ethereum. It's a self-sustaining, incentivized protocol. Boom, out there. And that's really what our goal is, to have the funding and make sure we're in a place to effectively create it so that it can be out there and not be solely dependent on us.
Yeah.
Because, like, with the work we want to do with making sure there's quantum resistance in it for long-term development, we actually want to use a DAG, a direct acyclic graph, because the way that the topology works, we believe is more conducive to actually the transactions, as well as using it with proof of stake, because of kind of that functionality. We believe those two things work together really well. Building these things out, making sure they're done well, and they can be released in a way that is secure, and that you have continual work on it, but make sure that it can be audited and out there in a way that we feel confident that it can continue to function independently. Mm-hmm. Yeah. That's our purpose right now. Then from there, as a business, once the network's out, our goal is really about the onboarding of creating new applications for Kivas, lending clubs, for banks and other facilities, be able to leverage the network to provide their services.
So you want to be like an open source lending club?
No, so as a business, we want to develop the applications for that lending club can exist on the network.
Okay.
So we want to develop the software and the tools so that existing organizations can operate on the network that we built.
I see.
So you create the essentially decentralized protocol, and then you want to be that engine that is working to onboard all the existing people, and as well as get new people into the network.
Like a blockchain for lending clubs, like a network for lending clubs who
exactly.
Who can then build the application on top of your network.
Right, because we want to essentially, like, the base platform can do micro lending, but then we come to how, like, lending for mortgages, when you come to other types of debt and other functionality, we think that exists as well, but we can't build that into our base protocol in the way we want to. But you can build that on top, and you can leverage that reputation that people have built in the micro lending and whatnot to actually start building up into this larger economic system.
And what stage are you now on? Development. So there is not like a beta available for people to try.
We have an alpha that we can show people.
Cool.
What you got? What you got?
Yeah, I got.
Show me what you got.
I want to critique your Federal Reserve name, but it.
Well, no. So one of the things when I was like looking a little deeper into the digital reserve was, so you're saying that essentially people are like pseudonymously, you track their credit.
Yeah.
Essentially, right? So can you explain a little bit more about how that process works?
Yeah. So essentially, if you're trying to be a borrower, like there's either an attestation by current stakers who would more or less be co-signing as you existing as a person.
Yeah.
Or the actual Oracle system, which would be somebody that's not necessarily a staker but willing to put up their credit, their history to attest to you in the beginning for you to start building up your history. So therefore you're now on the network, you've been attested to for your identity by either an Oracle or someone on chain already. Then from that you're provided a small like an initial reputation score. So arbitrarily let's say is 50 out of 1,000. So you have 50. That provides you access to maybe $50 of lending, which is in some developing regions more than enough. So
that already is like transcended boundaries.
Right, exactly. So therefore you have that access now. Now what's upon you now at this point is like when you bid on it to say what rate is reasonable to you. Now if you default on that, you can walk away. However, we also introduce you to the network. And it was more of a faucet to get you introduced to what's going on. And now you kind of have an incentive to see what's going on to actually pay it back. So you decide to pay it back. Now you have access to maybe 50, 55, 60, depending on the different criteria of what happened. So now you're increasing your capacity to borrow, as well as being a productive participant in the network, and you're establishing your reputation. So when you're at a certain point, now you've had accrued enough reputation to actually attest to someone else.
Okay.
And however, in that attestation, we are keeping track of how much lending is going out to make sure, because there's a constant optimization balance that's occurring to make sure that lending out, it's still going to make sure that even under defaults is not greater than what has been produced in the network.
Can I ask a question?
No, you can't ask no question.
Yeah, maybe. Shut it down. So I was thinking, is there some significant advantage of having this network or blockchain platform for specifically developing lending application as opposed to having say EOS or Cardano, where you can theoretically develop the same type of application on top of their platform? You see the question? So
yeah, no, right. You actually needs a specific
what's
built out for it, because if you don't, like the reserve in this case is built so we know we're secure. There's incentive to secure the network. So that incentive is paid to people who are now when proof of stake, you're committing some funds, right? That committed funds is what is actually where we're lending from, because you actually have a time period that those funds are locked in typically.
But I can emulate that in Ethereum network in EOS as well.
Well, no, so
I can create a custody account, or I can create.
Well, so like you have to create a separate chain. You couldn't do it on like Ethereum.
No, I can do that in Ethereum with smart contract, actually. Why not?
No, but then they don't need the consensus part. Like while they're securing it, the network's already secured. So there's no incentive. There's no reason for you to be locking funds.
So you want to stack the funds that are being used for lending with the staking of securing the network.
Exactly. Because like they're already locked, just like a bank. When you put your funds in and you know it's not going to be moved, typically, that's the basis for lending. In this case, we know that proof of stake provides a capital pool that would typically be stagnant during that time period. So therefore, we're leveraging that for lending.
I still don't understand why I cannot do the same in a smart contract environment in Ethereum. I can still have a smart contract, deposit some money there, treat it as a stake, and then use the smart contract to issue. Yes. If
you store it as a smart contract and you treat it as a stake, you could probably build out the similar functionality, but I don't think the actual staking and the lending would be they wouldn't be the part of the same pool, right? It would just be an arbitrary smart contract you've created that, like the functionality could be the same, but it's not a part of the protocol. Am I right?
Yeah, no, absolutely. That's why I was like, because if I didn't explain it well enough, I think he got it. So it's basically it's part of the protocol. It's part of the existence of how it functions. Yeah. Because if I do it as a smart contract, then also how am I going to reference what's happening there now? Because I'm actually modifying the monetary policy to be reflective of what's actually being done on chain of that lending process. Because remember, I'm saying that lending is a metric now of productivity on chain. So therefore, if we're doing really good lending, that means that new value is being created. That means that our monetary policy should be considering that new level of productivity and increasing for that. Now, if productivity and default is high, well then the monetary policy is decreasing, and they actually start looking more like Bitcoin in that perspective, because for me, Bitcoin has a long-term stagnation thing. If defaulting is high, we have a long-term stagnating thing until you have better lending. So therefore, you actually have this potential to look like some existing things, but it's dependent upon the borrowers, the people that's actually producing on the network and the value they're creating. And that's what I think is interesting.
Well, it is, but I still not convinced.
Yeah, that's pretty interesting. That hey, like that's a win. Yeah.
So point being that you certainly have to try that, but I think that you will have a competition. Yes, you will have a competition from so many other platforms, because I've heard something like that tried to be realized in other platforms, including Tether and even Tron. So I've heard about that.
Collateral free lending?
Yes.
Okay, see, the closest I know Dharma does collateral lending. Exactly. I know MakerDAO is explicitly collateral lending to yourself, like over collateralization to lend back to yourself. I know Compound does collateral-based lending. I know Celsius does collateral-based lending, but those are all requiring you to have capital. And if you already have capital, I mean, is like this is a situation where I say where's the systems that are designed for those who don't have to be able to leverage the skills and their wit and their power and their ingenuity to create value, and then bring that value on chain to be part of the network,
capturing value that is currently not able to be captured.
Right.
Yeah.
Like that's where I'm looking. I mean, and people know that's where they want to get, but having a systematic way of doing it is where I'm looking at, and doing it at a protocol level.
That phrase probably you have to put on top of your pitch, not at the bottom. That sounds much more convincing to me. Yeah. Yes, that's kind of define it. What you're trying to do. Yeah, kind of giving that power to people without a capital.
You have the timestamp. Well, here, so another question that was kind of coming up was, have you done some research into where the potential bad actors could throw wrenches in the network, and how you address them?
Yeah, so I actually wrote a piece about this. It was about the case for pseudo-anonymous lending, and there was about four things that I highlighted in that piece, and I hope I can remember what they are right now. So one of them was the end game issue, where it's basically like, I'll be a good actor in the beginning, and then I become a bad actor when the pot gets large enough, and I walk away with that. Another issue was that we identified what was the issue of just the people that you attract, basically adverse selection or moral, or basically immoral selection. They're basically people who are participating and were only because no one else would give them money. No one else will bet on them because they really are the worst. So that was a potential vector in that consideration. In the same thing you have to consider for even like healthcare. That was the whole thing about if you're doing this kind of healthcare thing, people who select it first are people who have health issues. The people who are healthy typically don't want to go there. So you had those in-game issues, and then also there was two other.
I would think since you're going on a referral, if somebody refers. For a cartel.
That's what I was thinking.
Just passing a referral off to their brother.
Referral bias.
Referral bias could probably be a vector as well.
Right. Yeah. And then that's where the staking part comes in. And one of the simple equations we actually looked at is always monitoring the overall returns that are happening, and then also the implicit network effects of people returning, because there's a velocity of money issue as well. Mm-hmm. So if you're also considering velocity of money, so impact on your network growth, as well as the payback, making sure that's greater than what people can walk away with. Because then, even if they walk away, if you take away what you've given and what they had, that might be equal. But if the network impact of them participating in the network, their economic growth is greater than that.
It's positive.
Yeah, it's positive. You can technically walk away.
Yeah.
And that's what we designed for. Like, we're designing for it. Makes that. So people, if you want to walk away, all right, that's fine. But make sure you're a productive part of the network. If you're productive, we're willing to take that.
Yeah,
Trade-offs.
sounds like creating your small kleptocratic world and trying to prove that it is not kleptocratic. It's okay. It's okay.
Hey,
Only practice will tell.
I mean, right? It's a start, right?
That's a start. Because
Bitcoin as an experiment
fair point.
in reality has not reached a point that its design has been proven.
Yeah.
That's not until that last coin is printed.
It's that's an excellent point. Yeah.
This is all one grand experiment.
Right, exactly.
And we're just in the middle.
Right.
So are there any other like last minute questions that we wanted to ask of Jomari? I think you've done.
I was about to ask that why you have this reserve, this dirty word included in the name of your company, because
this shirt is actually crypto at night.
I'm sorry, I didn't read it actually. I'm saying that
this is a podcast we're trying to do eventually.
Why you didn't include reserve in the name of your company?
No, so reserve, because you're actually creating a reserve in the process of the network, because it's actually a cost-based proof of stake, because we're trying to parallel a little bit how proof of work. Like you're burning energy. In this case, you're burning a little bit of money, and that money actually goes into our reserve. So it's actually was backing that lending in the case of defaults. So I mean, it is literally a reserve, and it's a digital one. So we was being very straightforward in our name, and also we know that the Federal Reserve exists, and some of the economic philosophy they have, we do reflect it. I mean, I don't have an issue with the Federal Reserve, because actually the Federal Reserve isn't actually as centralized as people
That's
actually
not
think.
the point. You don't have an issue. That's the point that most of the viewers have an issue.
No, but in reality, I'm not necessarily targeting like people who have just that strong libertarian philosophy. I'm targeting people who have a philosophy of there's more we can do, there's a greater impact we can make while still doing good. I think there's a greater market out there than how we've been. That's what I'm saying. The problem is we've been targeting this select portion of what cryptocurrencies can do around this libertarian cypherpunk philosophies. There's other economic philosophies about how the world can work that we can still use the same tools.
Oh, I see.
So I'm saying,
so a renegade here.
Yeah, right. So I'm
and more so, I think
intruder.
No, exactly. So I'm not sharing.
Get out of here.
I'm not sharing the same philosophies. I'm sharing the same tools.
Yeah, and more so, I think the term digital reserve. In 10 years' time, who knows? You could change the connotation of the word.
Oh, yeah. I like that.
That's a realistic thing, right?
So you're stealing that reserve.
Yeah. Oh,
that's good.
Yes, let's steal it.
If you're introducing it to new markets, to people who haven't really haven't developed opinion on it, then the whole idea could shift. More people could take on that philosophy. So I mean, I kind of like it.
I've got a question. So
no.
So there's one. So I've looked at doing lending products in the past, and I've tried to set them up through various ways. And the one thing that everybody was wanting to lend in 2017. So how do you think staking will reduce the volatility overall? Because if you send out loans in 2017 to people, and then they were due, 6 months later, and you lend a bunch of money out, how are you doing your controls? And is it just on the staking, or how are you reducing the volatility of the lending points?
That's a professional question.
So reduce volatility. So for stakers, they're already committed to a lock period.
Okay.
So, and then they're actually receiving, they're stakers, so they're also receiving the interest rate from their lending, their transaction fees, as well as the minting of the new coins. So therefore, those are things. These three potential revenue streams is what's supposed to be keeping them happy. Mm-hmm. So therefore, on the lending side, the idea is even if people are defaulting, there's reserve backing it already, and they're still minting the new coins as well as getting transaction fees. So those are
but it's erased then at that point.
No, but the reserve part is actually operating autonomously as essentially an on-chain like protocol level contract. So therefore, it's not that they're controlling the interest actually from that lending is actually more of an incentive. There's this thing called, I think it's called Hume's law, and it's basically saying if people get unexpected money, that actually has a higher economic impact than the money that you expect. That interest is not promised to you. You don't even know how much it's going to be because it's actually bidded on the borrower side.
Oh, okay.
Like so therefore, you're not dictating those rates.
Yeah.
You're not in control of it because the protocol is just saying you have to lock money.
Yeah.
Because
So therefore, when you do get some money, you're like, oh snaps, I got extra.
Let me stick around. Let's do more.
Yeah,
because usual way
that's the economic philosophy.
Yeah, I was say usually on these systems we have a bad turn and then it's a race to the bottom.
Well,
Yeah.
and another way to address it is just to increase the reserve, right?
Yeah, exactly. You just pump
that's
for
how
more money.
most of the
Yeah.
project I've heard about, they address volatility on the market by asking users to increase their reserve if there is a high volatility in a particular type of currency.
Yeah.
So I assume you don't doing that.
No,
right?
no. Like I said, I believe in strict monetarism as
Oh,
well.
I see.
So that's where I am similar to, I think, a lot of the current stuff is like I just don't believe in explicit scarcity.
So are you Keynesian?
So,
I don't even want to sit near to you.
no. I just believe that the monetary controls should be clear and transparent.
Yeah, you sound like a Keynesian. Okay. I will bear it another 5 minutes.
These be fighting words. No, economic philosophy wise, I've read a lot of them, and I kind of. I have went with that, which resonated more with me in the economic world philosophy that I would like to see, and that's kind of the competing even economics. Like, what does the world look like? What incentivizes people? Like what are they seeking for? Like, what drives them? And for me, like I said, I think there's a population that is driven by these things. Like, it's not everybody, and that's what I think is cool about this. Like I said, you can create these populations that are global. That's not necessarily anywhere specific or any person specific. It's like saying, okay, if there's a population of 2 billion people that reflect this, and the other 5 billion on this planet think otherwise, 2 billion is more than enough to sustain an economic system.
I think we got an excellent topic for the next podcast to have this discussion between Keynesians, libertarians, monetarists, and Marxists.
Like Marxists.
And everybody will got their own coins there because everybody going to be saying we are experimenting with it.
No, and that's why, funny enough, that's the world we live in, like where people are saying, hey, these are the things we believe. Why don't we operate according to that? We couldn't do it before in a real way.
I think it's a good point. It's a good point because now we shouldn't go to the streets and protest against each other, right? Or we shouldn't throw to each other's heads like a nuclear devices, small, big. Now we can just go to blockchain, realize our visions, and then see how it works.
Yeah, exactly. There you go.
It's an
Good.
I'm with you. I'm on that one.
I will not share with you one room, my friend, but I will share with you one blockchain.
It's like, no, right? It's like, get out of my house.
But I'll see you on the chain. All right. Is there anything else you'd want to tell the viewers about the Digital Reserve, like where they can find you, what's going on next?
Yeah, the Digital Reserve. We're on many of those good social media, like we're on Facebook, Medium, Twitter, Instagram. What else social media is? To Telegram.
Yep.
Like, I think we're all it's under the Digital Reserve, our Digital Reserve. If you Google us, you typically end up with us. Sometimes you end up with the Reserve, which is a stable coin, which is not us. And sometimes you end up with the Digital Reserve people who don't do anything and like they just like have the name on something. not them. Like they have a big globe and it's black and they talk about some random stuff. That's not us. Like our page is clean and nice. TheDigitalReserve.org.
Yeah. That makes it easy to find.
Feel free to reach out to me. Like, we can always chop it up. Jomari, Jomari _P. Like, hey, I mean, my name was already gone. I had to throw that underscore in there.
What was it? The Jomari with the
Jamari underscore P.
No.
Jamari on Safari is Ferrari.
Jomari
Yeah,
Safari.
Jamari.
I remember now.
And sometimes, like, I eat calamari while playing my Atari. But
He can go on forever. Well, yeah. Thank you so much for coming.
it was a
down
pleasure.
and
Thank you for having
being
me.
part of this. This was
Thank you.
this is extremely enlightening for me. Like, finance is definitely not my strong
Yeah.
point. So I hope that the viewers learn just as much as I did, if not more.
Yes.
And then I guess just closing words. This has been State of the Industry. Upcoming stuff from us from the Den. Same stuff. We've got UC Irvine, our developer class, and our Hyperledger class, blockchain developer in the Hyperledger, happening next month. If you're interested, go to our website. Go to the bottom. There's 2 links for UCI. Check that out. The same round of classes we've partnered with Hacker Dojo and Starfish Mission up in San Francisco. So we have 3 locations now that we're running out of. And those events, start in June, I believe. So if you guys are interested, if you're looking to get into the space, if you're looking to, meet people like Jomari and connect with us, these are the places to do it. Get educated. Don't be that bottom rung of the ecosystem.
Be informed.
Be informed. Be at the top so you have the incentives.
Top of the food chain, no bottom of the food chain.
Exactly.
Apex predator.
This is your opportunity.
Alpha Bitcoiners. Right?
So again, those events are happening in June. Blockchain as a Service panel, that's going to be happening late next month. Final information on all this stuff at www.theden.io. And all our socials at Denexus. You'll find us over there. Any other closing statements?
Well, thank you for being with us. I hope next week you'll join us for the same podcast. We're not the same.
And we always forget to tell people, don't forget to like, subscribe, and follow on all platforms. We're
smash
dropping
button.
every
Wherever it's
single
at.
week. We got new guests. You're always going to find crazy cool people like Jomari, and we want you guys to be a part of it and help us, get the word out. So,
And by the way, we also in the Telegram, Decentralized Education Nexus, as well as Ask Svet About Crypto Telegram channel, where we analyze white paper and talk about more details about technical stuff. You're part of that.
His page, legit.
And of course, check out that application. Even I started to be, not application, network. I started to be interested. So,
Good.
Good job. Good job. Good job. Yes.
Yes. No, absolutely.
and Jason,
Only you can create a better world.
any announcements ready yet?
Yeah, no announcements this
Any
week.
show?
I am building some things. We should have an announcement here soon enough, and I'm allowed to talk about them.
We're just gonna let the suspense keep building on Jason's face.
It'll come out of breadcrumb at a time.
All right. Well, with that, thanks again very much for watching, and we'll catch you guys next week.
Thank you. Bye-bye.